Right, okay, let me now bring on board Nilesh Shah of Kotak OMC to take the conversation forward. Nilesh bhai, good morning. Thank you for joining us. Uh, in the month of March, Nilesh bhai, we were using words like excruciating fall, panic, financial Armageddon. In the month of April, we have used things like sharp comeback, bulls are back, and the feeling of FOMO. Markets overshot themselves on downside in March, but have they overshot themselves in the month of April and in May? And do you think a sharpish correction is now around the corner?
Nikunj, everything will depend upon intersection of medical solution and fiscal and monetary stimulus. If we are lucky and we get early medical solution and we get fiscal and monetary stimulus, which is more than needed by the economy, then markets will stabilize. However, in that unfortunate scenario where medical solution is delayed and we don't get fiscal and monetary stimulus which is required by the economy, then certainly markets will continue to slide. I think this is where markets and economy both will be looking forward to, intersection of medical solution and fiscal and monetary stimulus.
So, why have markets run up despite no clear medical solution in sight? It's not only our markets but globally also. I mean, I looked at last week's data. Nasdaq is in the green. Now, when world is falling apart, Nasdaq has managed to close in the green, and Dow also is not down more than 20%. So, can I safely assume that somewhere the markets had run up ahead of themselves and now normalization will happen?
It's difficult to say whether markets have run up ahead or below because they are constantly discounting news. Now, on one side, central banks have printed huge liquidity. Fed's balance sheet has exceeded 6 trillion for the first time, and as we speak, who knows, it might exceed even $7 trillion. So this money which has been printed is bound to inflate asset prices. That's probably happening on the global side. Second, there has been some interesting developments on the medical solution side. Yesterday we heard news in Israel, University of Oxford we have heard about. Italy also made some news. There may be sensation, there may be reality, who knows. But market is constantly trying to analyze data to find out a solution. But looking at Indian market, clearly there were a couple of factors which pulled market from 7,600 onwards. One was proposed increase in weightage by MSCI and FTSE Russell. MSCI is likely to increase India's weightage by about 8% till by 30th June. FTSE Russell is likely to increase by up to 17% from here till 31st of August. Both this proposed weightage increase in benchmark indices is likely to result into FPI flows. So that could have given one push to the market. Second could be the pure valuation. In October 2008, at 8,000 Sensex, market cap to GDP ratio had come down to 43%. And at 7,600 Nifty, market cap to GDP ratio was 47%. So cheap valuation also probably pulled some people to buy, and combination of that probably resulted into market bouncing back in the month of April. But we cannot certainly say that markets have bottomed out till such time a durable medical solution emerges.
Right. We were looking at the market composition yesterday, Nilesh, in terms of the FMCG and consumer names, and with the exception of ITC, till yesterday, most of the other consumer names like a Nestle, HUL or a Godrej, they were trading at a premium to their 5-year average. Do you think that's one space one should be wary of? Right now, the assumption is that consumer companies generate a lot of cash, they will not go belly up, the demand of essential has not dropped, and P multiples have expanded despite a volume drop which HUL is reporting. Do you think somewhere one needs to differentiate between safety and absurd premiums?
Today, this FMCG companies where supply is not emerging on the selling side are trading at higher and higher valuation, and buyers are buying for safety. Buyers are buying for exactly the reasons which you mentioned. But at some point of time, an investor will have to look at whether this valuation makes sense or not. In one of the FMCG company, they contribute about 18% to global profit, but account for 60% of market cap at one point of time. That kind of disparity between profit and market cap will result into some seller at some point of time. And moment supply comes into the stocks, the valuation won't be able to stay and correction will inevitably occur. So when you are buying safety, do remember that you are paying a huge price for it. It's far better to create a balance between safety as well as valuation.
Right. Nilesh, the government clearly seems to be in revenue collection mode. I mean, desperate times do call for desperate measures. You've got the ED reporting that the Sooty stake sale in Axis and ITC could happen as early as this week, if not next. We've also got the OMCs in focus. They've upped the taxes on petrol as well as diesel. But my only point being, that this is a distressed sale when it comes to Axis and ITC if those stake sales do go through. But when it comes to OMCs, it puts a spanner in the works for the disinvestment process, which really seems long pushed back right now because, it's the OMCs which are going to be bearing the brunt of this hike coming in taxes and not really the consumers.
Undoubtedly. But partially, oil marketing companies had exceptional margin as oil prices had come down and the local oil prices had not been revised. So it was expected that there will be some revenue collection measure by government to take away that exceptional profit from oil marketing companies. It was not an entirely unexpected step. However, your point is very, very valid. Should we be looking at market divestment? Should we be looking at strategic divestment? Now, clearly, even in today's market, there will be players who will be interested in India on a strategic basis. And if we, instead of adopting piecemeal investment, try to go for strategic model, it will work better for government in terms of value creation. Government can also look at public-private partnership model. The most glaring example is Hindustan Zinc Limited. Government has retained minority ownership in that company, given away the management control and majority ownership. And the price at which it was divested in 2001, today they get more than that by way of annual dividend from the company. So instead of doing piecemeal market divestment, if we can adopt strategic divestment with public-private partnership, the more value accretion will happen to the government.
Sure. Nilesh, you've got an Airbnb profit warning coming in. They've talked about a sales floor cut as well. Not just that, even if you look closer home, that's pretty much the case within OYO. We've been talking about the consumer spend. You don't know when aviation, or for that matter, the hotel industry is going to thrive back. I think it's long gone, and till a year at least, unless extremely crucial, I don't think anyone's going to be flying or taking that holiday if need be. Having said that, there is one of the brokerages, without getting into specific names, they've come out with a positive note on one of the QSR companies, saying that QSRs are going to be among the first beneficiaries of the recovery in discretionary consumption after the sharp slowdown because of the lockdown and the impact post-COVID. Do you also believe that QSR as a segment is going to bounce back the fastest?
We'll have to keep our mind open and analyze data. Today, there are lots of contradictions coming about consumer behavior. We heard in QSR on one side, some people saying that people will be cutting on their spending and discretionary spends will, get deferred. On the other hand, people are saying that no, QSR will be able to bounce back first. In auto also, we are saying the same thing, where some people are saying that people will defer their purchase of vehicles. On the other hand, there are people who are saying that people will move away from public transport into private vehicle and hence auto demands will go up. my limited point is that today we'll have to see how consumer behavior changes and keep our mind open, keep on processing the data which is coming on in India, in outside of India, and try to formulate hypothesis based on data rather than your hearsay. You'll have to keep an open mind because the world is going to change, consumer behaviors are going to change, and companies will have to adopt in terms of providing the services. If I can summarize this entire thing in one manner, we are going to see products and services which were offered in shampoo bottle earlier, larger quantity, they will all have to adopt to sachets model. You'll have to reduce your product and services in terms of ability of consumer to buy. You'll have to show them value add. Uber luxury brands will find it difficult, whereas value for money brand will find it easier. So we are going to see from shampoo bottle to sachetization of products and services across every industry, every business.
Yeah, absolutely. Right. I was just looking at a list of companies which have resumed operations. A large part of the auto industry is back on its feet, auto ancillaries as well. And daily get that entire list of companies resuming production as well. What at large, Nilesh, is the market pricing in? Are we looking at 2 quarters of further earnings pain? Or do you think it's more than that? Or maybe not even yet. Market has not begun pricing in the earnings damage. We're just aligning ourselves with the rest of the globe and medical data so far.
I think market right now is swinging from optimism to pessimism, from hope to fear. Every time a news about medical breakthrough comes, market will rise. Every time a news about fiscal and monetary stimulus comes, market will rise. Every time we see drop in number of deaths, number of cases, market will rise. In absence of that news, markets will fall. I don't think so. Market today has a definitive plan about the earnings because companies themselves are not sure of what kind of earnings they are going to get. Clearly, market will also be worried about cost of restarting the companies. The automobile companies were allowed to operate their business from 20th April, but they took time to restart their operations. And even today, their capacity utilization will be below 50% for sure. So markets will swing like a pendulum. It will swing between hope and fear depending upon the news flow.
Sure. What's looking safe then, Nilesh? Up until last week, you could safely say that even a basket buying of pharma or a mutual fund investment of a pharma-specific fund will keep you safe. But that doesn't seem to be the case because now that rationalization is setting in and the market within pharma is also separating the men from the boys. It's not all of them, but a few of them which are continuing to hold up. Within pharma, how do you make that segregation now? And is it really the safe place to be? Because the way the market seems to be treating some of the pharma names, it's that, all of them are going to come up with a vaccine.
So in pharma, again, different companies have different business models. Some are local focused, some are global focused, some are vertically integrated from APIs all the way to final product. Some are just suppliers of bulk drug. So we won't be able to brush all pharma companies at one paint or one brush. We'll have to take them individually. And today we have seen a broad-based rally in pharma sector. I think from here onwards, men's will be separated from boys. One important thing in the market is that leveraged companies will find it very, very difficult. Equity shareholders in leveraged companies can be wiped out in a very short period of time if this lockdown persists for a longer period of time. So safety will be in non-leveraged company. You must invest in the companies which will be able to survive the current downturn. If in the current downturn companies don't survive, then you as equity shareholder will not be able to make money. So you have to focus on balance sheet of the company far more than the P&L of the company in probably next 3 months.
So in just 3 days, this market has lost a good 700-800 points from the top, and that's how markets move. I mean, they are fluctuating wildly right now. and it's anyone's guess which way things are going to move, which way things would stabilize. So Nilesh, where do you think this cycle will put the seeds or will lay the land for the next earnings upgrade or the next trend? You know, with each cycle something new happens. When TMT got challenged in 2000, infra companies made a comeback. That led to the birth of China. When 2003 crisis happened in China, it led to internet shopping culture, is what I've been told. Similarly, after the GFC crisis, we saw return of Indian consumer and private banks and some other NBFCs. Whenever the crisis will settle down medically, where do you think the puck is going to move?
Nikunj bhai, we'll have to see at the consumer behavior. Some trends are visible. For example, in entertainment is moving from outdoor to indoor. From theaters and stadiums, we will sit at home on OTT platforms. We will also see non-discretionary consumer staple being able to maintain their growth path, but discretionary consumer durable will probably get deferred as income losses and job losses are visible. We will see downtrading of brand as people move from Uber luxury brands to value for money brand. We will also see companies creating products and services in smaller formats, in smaller denomination, so that consumers can continue to use it or pay for it despite lower incomes. So these are some of the trends which are visible. What is not so sure about is work from home culture going to be there? What will be impact on commercial real estate? Second, do we see huge supply chain diversification happening out of China? Which countries will benefit from it? Will we see strong participation in becoming global supply chain management? If yes, then it is as big an opportunity like IT sector of 2000. So we will have to see how things are shaping up. And as I mentioned earlier, we'll have to just keep mind open, and we'll have to absorb data which is coming in, and we'll have to factor these changes in behavior into our portfolio. But as long as you stay away from leverage company, you have a far better chance of surviving the downturn. And when upturn comes, competition will be less, and people who survive will be benefiting.
Right. Right. So my next immediate follow-up question is, where is the entire IT services sector headed? TCS came on our show 2 days ago and they've talked of something which is transformational. 75% of the workforce in the next 4 years will start working from home, which means the cost of running campuses, the cost of travel, SG&A expenses, the cost of boarding, the cost of canteen, everything gets a reboot. Do you think Indian IT companies could eventually emerge as one of the biggest winners, because now they are attempting and now they are thinking what appeared unfathomable, let's say 6 months ago?
Nikunj, this is very, very good from a cost point of view, from a delivery point of view, but it's not going to be a game changer from a business point of view. Just because I'm operating from home, is it going to give me better business, let's say on product side? Answer is no. For product development, you'll have to make investments, whether you operate from home or office, it doesn't matter. Now, many of our companies are making that transition from, let's say, old technology businesses, which is maintenance and infrastructure, application development, and so on and so forth, into digital side of the business. But that transition still will have to be carried out despite this situation. Now, what you are doing is, in terms of cost, in terms of service deliverability, despite disruptions coming because of coronavirus kind of situation. But at the end of the day, you still have to go and achieve the sales you have to be relevant to your customer in the new environment. And the Indian IT companies' biggest advantage is that none of them are leveraged. Most of them have cash on the balance sheet. So there's no doubt about whether they'll be able to survive the downturn or not. But will they be able to participate in the upside in the coming changed world? Well, they'll have to focus on, can they provide products on risk protection side? As people operate from home, worries about phishing, hacking, all those things are coming out. Do we have product over there? Similarly, as data moves on cloud, people who have servers on cloud, people who provide cloud computing, data analytics over there will do well. So companies will have to still keep on transforming themselves so that their product, their services are useful in the changed world.
Right. Okay. Nilesh, my final question. You got two lovely daughters. So if you really have to, let's say, write a letter to your daughters describing how should one understand coronavirus, what it means for them. They are right now students. One is in college, the other one is in school. How will the letter to your daughters start? And how will the letter end? What would you like to summarize, indicate to people who, in a sense, understand about coronavirus but do not know how to really apply that in their learning curve of life?
Nikunj bhai, I will simply say to them, stay with the nature. We all have been created by an almighty with certain equilibrium. The world doesn't belong to humans. It also belongs as much to other living things, including animals, birds. So stay with the nature. Don't mess with the nature. If you mess with the nature, you get problems like coronavirus. Stay safe, stay healthy, stay with the nature. That should be the only message to my daughters.
That's all that we are attempting. Just staying safe and staying healthy. Nilesh, you too. Thanks so much for taking the time out and joining in today. Good to have you on the show and chat with you as always.